Hi, I'm Mikhailo. Welcome to the webinar. If you work in payroll, finance, people ops, or you are the founder who ultimately gets the escalation when something goes wrong, you have probably seen the familiar version of the operating calendar, a spreadsheet that began as a practical checklist and slowly became the place where the organization stores deadlines, status notes, exceptions, tribal knowledge, and anxiety. At first, that spreadsheet is useful, but as hiring expands, the spreadsheet becomes something else. It becomes a fragile operating system without the controls we would normally expect. Today, I'm going to show you how to move from a calendar that merely lists dates to one that helps a team run reliable work. The framework is called CLOCK: cutoffs, leads, owners, change control, and knowledge trail. By the end, you should have a practical way to design a global operating calendar, assign accountability, triage exceptions, and create a record that gets smarter every cycle.
When teams describe a payroll or workforce operations failure, they often name the final visible event. Payroll was late, the invoice was unexpected, the hire was not ready, or the manager changed something too late. But those are usually outcomes, not root causes. The root cause is often that the calendar did not make the work legible. The date may have existed, but the organization did not know what had to be true by that date, who had to act, which upstream dependency mattered, or what would happen if the deadline was missed. For example, consider a compensation change. The person requesting the change may see one date, the intended effective date. Payroll may see a different date, the point at which an approved, validated change must be received to be included safely. Finance may see another date, when forecast assumptions need to be locked. And people ops may see another, the documentation and manager communication needed before the change is enacted. If those dates live separately, the organization does not have a shared calendar. It has conflicting memories. Reliable operations begin when the calendar expresses the real flow of work, not simply the last date on which someone hopes something will happen. That means every important calendar entry needs to answer a few operational questions. What is the cutoff? What is the lead time? Who owns the action? What changes are allowed after the cutoff? And where will we find the record later if someone asks, why did this happen? Those 5 questions are the structure of CLOCK. A strong calendar does not eliminate exceptions. Global workforce operations will always have exceptions. What it does is reduce surprises, make trade-offs explicit, and give the team a consistent way to respond when reality does not match the plan. Let's define the framework before we apply it. C is for cutoffs. A cutoff is not merely a due date. It is the latest point at which an input can be received, reviewed, approved, and processed without creating an unplanned exception. A good cutoff is operationally meaningful. It tells people what is still possible and what is no longer routine. L is for leads. Lead time is the time required before the cutoff to complete work safely. This includes collecting information, validating it, resolving questions, obtaining approvals, and communicating outcomes. Most teams underestimate lead time because they count only the final action, not the coordination required before it. O is for owners. Every calendar event needs one accountable owner. Many people can contribute, approve, or be informed. But if ownership is distributed vaguely across payroll, finance, and people ops, it is often owned by nobody when the work becomes urgent. The second C is for change control. Changes are normal. Uncontrolled changes are expensive. Change control defines what can change, who can authorize a change, what evidence is required, how the impact is assessed, and how the decision is communicated. And K is for knowledge trail. A knowledge trail is the durable record of what was requested, decided, changed, communicated, and learned. This is what allows a team to answer questions quickly, onboard new operators, improve future cycles, and avoid rediscovering the same issue repeatedly. Together, CLOCK changes the calendar from a passive list of dates into an active control surface. You do not need to implement all of it perfectly on day one. The practical approach is to begin with the few events that have the highest impact: payroll input cutoffs, payroll approval, funding or reconciliation activities, worker starts and exits, compensation changes, and any country-specific or entity-specific deadlines that repeatedly generate exceptions. Then, cycle by cycle, you make the work more explicit. The first practical design choice is the cutoff. Many teams publish a payroll cutoff date, but they do not define what the cutoff actually means. Does it mean managers have submitted changes? Does it mean people ops has reviewed them? Does it mean approvals are complete? Does it mean payroll has validated the data? Those are very different states. A reliable cutoff is a promise boundary. Before the boundary, the organization is operating in the standard path. After the boundary, the organization is either declining the request, deferring it to the next cycle, or handling it through a controlled exception path. For each cutoff, I recommend defining 4 things. First, what must be complete? For example, approved variable pay changes have been submitted with supporting documentation. Second, what does complete mean? This is where ambiguity disappears. Complete might mean the worker is correctly identified, the amount and currency are confirmed, the effective date is clear, the approving authority is documented, and any required internal checks are finished. Third, who confirms completion? The person who requests a change should not be the only person deciding it is ready. The confirmation owner may be a people ops partner, a payroll administrator, or a designated approver depending on the workflow. Fourth, what happens after the cutoff? This is the line that protects the team. A late request should not create a debate from scratch every time. The calendar should state the default outcome, next cycle processing, exception review, or a specific escalation route. This does not mean we become inflexible. It means flexibility has a known cost and a known decision path. When a manager says, "Can you just add this one item?" the team should not have to improvise policy under pressure. They should be able to say, "The standard cutoff has passed. Here's the exception process, here's the owner, and here's the decision we need." That is a much healthier operational conversation. Once the cutoff is clear, we work backward. The mistake I see most often is planning from the visible event forward. A team begins with payday, payroll submission, or the date a report is due. Then it adds tasks backward until the calendar looks full. A better approach is to identify the earliest dependency that could block the outcome and plan from there. Let's use a fictional example. BrightPath Labs pays workers across several locations and has a monthly operating cycle. The final payroll input cutoff is the 18th. At first glance, the team might tell managers, "Please submit changes by the 18th. But that is not a workable instruction. If People Ops needs 1 business day to validate changes, finance needs time to review a material cost variance, payroll needs time to prepare the file or workflow, and the team needs a buffer for clarification. The true manager action date might be the 13th, not the 18th. That difference matters because the 13th is the date that protects the 18th. The 18th is simply the latest point at which the standard process can accept a completed package. I like to map lead time into 5 stages: collection, validation, approval, processing, and communication. Collection is the time required to gather the request and supporting information. Validation is the time to check whether the request is accurate and actionable. Approval is the time required for the right decision maker to approve it. Processing is the operational time to execute the approved request. Communication is the time to tell relevant people what happened or what will happen. If any one of those stages has no time allocated, the work will borrow time from somewhere else, usually from the person trying to reconcile the problem at the end. A calendar becomes reliable when it protects the earliest dependency, not just the final deadline. The next element is ownership. In cross-functional operations, many people touch the same event. Payroll may process it, people ops may validate it, finance may approve a budget impact, a manager may supply the original input, a founder may need visibility into a material exception. That is normal. The problem begins when the event has many participants but no accountable owner. For every meaningful calendar event, name one person or one role that owns the outcome, not every task. The outcome. For example, the accountable owner of a compensation change cutoff might be the people ops operations lead. Payroll is a contributor that confirms whether the request is processable. Finance is an approver when a threshold is met. Managers are contributors who submit the required information. Executives may be informed of material deviations. The accountable owner is responsible for making sure the event is ready, not for doing every piece of work personally. This distinction is important because it changes the escalation pattern. Instead of everyone asking, "Who is handling this?" the team asks the owner, "What is the status, what is blocked, and what decision is required?" At BrightPath Labs, a simple ownership table could sit next to every recurring event. It might include the event name, the accountable role, the backup owner, contributors, approvers, and a communication audience. The backup owner matters. People take leave, work across time zones, and occasionally become unavailable at exactly the wrong moment. A calendar that depends on a single person's memory is not resilient. Ownership also needs a decision threshold. If an exception affects a small contained item, the owner may resolve it within the operating rules. If it changes a material payroll amount, timing, worker experience, or financial forecast, the owner should know precisely who must decide and by when. Clarity is not bureaucracy. It is kindness to the people doing time-sensitive work. Now we come to change control. A well-run calendar should expect change. New hires start, workers exit, managers discover errors, compensation decisions evolve, finance receives updated information. The question is not whether changes will occur. The question is whether the organization has a consistent way to decide what to do when they occur after a planned boundary. The key principle is default first, exception second. The default path should be fast, predictable, and easy to understand. It handles requests that are complete and arrive within the established lead time. The exception path should be deliberate. It should not be a hidden shortcut for whoever knows the right person to message. I use a 5-step exception sequence. First, classify the request. Is this a correction, a late submission, a new request, a data issue, a policy question, or a genuinely urgent worker impact issue? Second, assess impact. What could change if we accept it now? Consider payroll accuracy, worker experience, approvals, internal controls, cost visibility, operating capacity, and downstream communication. Third, authorize. The right approver depends on the impact. The calendar should identify the authorization threshold in advance. Fourth, record the decision. Not a vague chat message, but a durable entry that captures the request, decision, reason, owner, and required follow-up. Fifth, communicate. The requester impacted worker where appropriate, manager, payroll, finance, and people ops should receive the information they need. Not necessarily the same level of detail, but a consistent outcome. Change control fails when it is so heavy that people avoid using it. It also fails when it is so loose that every late request becomes urgent. The balance is a tiered approach. Routine requests follow the standard calendar. Low-impact exceptions are owned and documented. Material exceptions are escalated quickly to the correct decision maker. That gives the organization speed without pretending that late changes are cost-free. The final clock element is the knowledge trail. A calendar can run smoothly for months because a small number of experienced people remember what happened last cycle, who approved the unusual case, and where the supporting information lives. Then, someone changes roles, takes leave, or simply cannot remember why a particular rule exists. At that point, the organization discovers that it had information but not knowledge. A knowledge trail should make each meaningful exception reconstructible. If someone asks, why was this request handled differently? The team should be able to find the answer without searching multiple inboxes, chat threads, and personal notes. For each exception, retain 6 things. The request, what was asked and when. The evidence, the information needed to support the request. This might be internal documentation, an approval record, or an explanation of the factual correction. The decision, what was approved, declined, deferred, or escalated. The owner, the person accountable for closing the issue and any required follow-up. The communication, who was informed and what outcome was communicated. And the follow-up, what needs to change next time. Perhaps a manager needs guidance, a recurring data source needs correction, or a cutoff needs to be clarified. The purpose is not surveillance, the purpose is operational continuity and learning. At Bright Path Labs, I would review exception patterns at the end of each cycle. If 3 late requests came from the same handoff, that is not 3 isolated failures. It is evidence that the calendar, lead time, ownership, or training needs improvement. A good knowledge trail lets the team shift from who made the mistake to what condition made this predictable. That is the mindset that makes operations more reliable over time. For the next 6 minutes, I want to place the clock framework in the context of evaluating a workforce platform, including deal. This is a conceptual segment, not a product demonstration, implementation recommendation, legal opinion, or promise about outcomes. Platform capabilities, availability, and suitability can vary, so organizations should verify current details directly with the relevant provider and with their own appropriate advisors. The key point is simple. A platform can support an operating model, but it cannot replace one. When evaluating Deal or any platform used in global workforce operations, I would start with the operating questions before the feature questions. First, does the workflow fit the way your organization needs to run? You should understand which events happen on a regular cadence, which teams initiate them, who reviews them, and what must happen before the work can proceed. If the operating model is unclear, adding a platform can simply make unclear work move faster. Second, where does data ownership sit? Be explicit about what system or team is authoritative for worker information, compensation decisions, approvals, and financial reporting inputs. When data exists in multiple places, the calendar should define the point at which it is considered validated for the cycle. Third, are approvals clear? A platform may help structure or record workflows, but your organization still has to decide who can authorize a change, what evidence is required, and what happens when an approver is unavailable. Fourth, what reporting does the finance and operations team need to run the business? The answer is not just, can we get a report? The question is whether the timing, definitions, reconciliation process, and ownership of that reporting are clear. And fifth, how are exceptions handled? This is often the decisive question. The standard path is important, but the operating model is tested by a late change, a correction, an incomplete request, or an unexpected dependency. So my recommendation is not to begin with a vendor checklist. Begin with clock. Then use that clarity to evaluate how a platform might fit into your processes. Let's make this even more practical. Imagine BrightPath Labs is considering how a platform such as Deal could fit into its global workforce operations. The team should not ask only, can the platform handle our current request? It should ask, what operating discipline do we need around the request so that it is handled consistently? Start with cutoffs. The team needs to know what changes are still eligible for the current cycle, what must be complete before a change is submitted, and what happens after the cutoff. Those are operating decisions. A platform may provide a place to execute or document actions, but the organization must define its own routine versus exception boundary. Then look at owners. Someone needs to own the quality of workforce data. Another person may own financial approval, and another person may own payroll cycle readiness. A technology workflow is most useful when those roles are already understood. Otherwise, the tool can create notifications without creating accountability. Then look at the knowledge trail. Ask where the organization will find the original request, the decision, the approver, and the communication history later. The answer may involve a platform, an internal system, a documented process, or a combination. What matters is that the team can reliably retrieve the story of an exception. I also encourage teams to separate three questions that are often mixed together. The first is, what is operationally possible? The second is, what is authorized under our internal policy? The third is, what should we communicate to the worker, manager, and finance team? These questions may have different owners and different evidence requirements. Keeping them separate prevents a technical possibility from being mistaken for an approved business decision. If you want to explore Deal further after this session, use the referral link provided in the follow-up materials. Please review current information directly with Deal and determine independently whether it fits your organization's needs. My Kylo may receive compensation through that referral relationship. That disclosure is important, and it does not change the framework. Technology works best when the calendar, ownership, and exception rules are already clear. Let's bring the framework together with a fictional company, BrightPath Labs. BrightPath Labs is growing, operates across multiple locations, and has payroll, finance operations, and people ops responsibilities that overlap throughout the month. The company does not need a perfect enterprise operating model. It needs a calendar that makes routine work visible and exceptions manageable. Here is one illustrative monthly flow. By the 10th, managers submit routine changes and required inputs. The people ops owner is accountable for making sure managers know what is needed and for escalating missing submissions before they become late. By the 12th, people ops completes validation. This means requests are not merely submitted, they are sufficiently complete, internally reviewed, and ready for the next step. By the 14th, finance ops reviews changes that meet the organization's defined materiality threshold. The purpose is not to reapprove every routine action. It is to ensure that meaningful cost or forecast implications are seen before the cycle is locked. By the 16th, the relevant final approvals are complete, and payroll confirms readiness for the standard processing path. The 18th is the standard cutoff. After that point, new or changed items do not automatically enter the normal path. They enter exception triage. And on the 20th, the operations lead reviews the exception log. Not necessarily to process every exception on that day, but to identify open decisions, unresolved patterns, and upcoming risks. Notice what this calendar doesn't try to do. It does not list every individual task in the organization. It identifies the control points where a delay, a decision, or an incomplete handoff could affect the cycle. For each row, BrightPath should also maintain the lead time rule: accountable owner, backup owner, communication audience, and link to the relevant operating checklist. That turns a simple calendar into an operating rhythm that people can actually follow. Now let's look at what happens when the calendar meets reality. At BrightPath Labs, a manager submits a compensation-related request after the standard cutoff. The manager says it is urgent. The team should not begin by debating whether the manager is persuasive. It should begin by classifying the request. A Tier 1 exception is a complete late request with limited impact. The request may be valid, but it arrived after the standard cutoff. The operating rule may be to defer it to the next cycle unless a designated owner approves an alternative. The point is consistency. A Tier 2 exception is a data correction. Perhaps a previously submitted item contains incorrect information, or an internal record needs to be corrected. The team validates the issue, confirms the appropriate evidence, assigns the owner, and makes a documented decision about the correction path. A Tier 3 exception has material impact. It might affect a worker significantly, create a substantial cost variance, change a major forecast assumption, or require a decision outside routine authority. This requires rapid escalation to the designated decision maker, plus a clear record of the rationale and communication plan. The phrase I want you to remember is, urgent is a classification, not a feeling. Some requests are emotionally urgent because a person is frustrated, surprised, or under pressure. That does not mean the request should bypass every control. It means the team should respond promptly, respectfully, and through a known decision path. The triage log should capture the date received, category, requested outcome, current cycle eligibility, impact assessment, decision owner, final decision, communication status, and preventive follow-up. Over time, this log becomes a source of operational improvement. If Tier 1 late requests are common, the manager lead time may be wrong. If Tier 2 corrections recur, the underlying data handoff needs attention. If Tier 3 issues repeatedly appear at the last minute, the organization may need earlier finance visibility or clearer decision rights. You do not need to redesign every workforce process before you can improve reliability. In the first week, map the critical events in one operating cycle. Focus on the events that create the greatest risk if they are unclear. Payroll inputs, approvals, financial review points, worker starts and exits, compensation changes, and recurring reconciliation or reporting activities. In the second week, add the clock fields to those events. For every event, define the cutoff, the lead time, the accountable owner and backup, the change control rule, and the place where the knowledge trail will live. In the third week, pilot exception triage. You do not need a complicated system. Use a consistent intake and review process. The important thing is to stop making exceptions invisible. Record the request, assess the impact, name the decision owner, and communicate the outcome. In the fourth week, hold a short retrospective. Ask where the calendar was unclear, where an owner lacked authority, where lead time was unrealistic, and where the team had to search too hard for information. Then make 1 or 2 improvements before the next cycle. The goal is consistency before complexity. A calendar does not become reliable because it contains more color coding, more tabs, or more automation. It becomes reliable because the people using it know what is due, what ready means, who owns the decision, what happens after the cutoff, and where to find the record. All registrants will receive the blank clock operating calendar template after the event. It is designed as a starting point, not a universal answer. Your organization should adapt the fields, decision thresholds, and review cadence to its own operating context. Let's close with the simplest version of the work. Choose one cycle. Do not start with every country, every worker type, every policy, and every exception your organization has ever encountered. Choose one important operating cycle. Define the real cutoffs, not just the final date, but what must be complete before that date. Name the accountable owners. Make sure each important outcome has one person or role responsible for driving it, plus a backup. Publish the exception path. Let managers, finance partners, payroll, and people ops know what happens when a request arrives late or incomplete. A clear, "not this cycle without review," is often more useful than an unclear, "we'll see."